In today's video, I'm going to be giving you a very simplified yet effective approach on how to trade order blocks. Before jumping in and learning all the complex strategies out there, many people tend to skip the basics when the basics are the exact thing that provide you with a solid foundation for the more advanced strategies out there. By the end of this video, you should have a solid understanding on what order blocks are and how you can implement them effectively in your day-to-day trading. So, as you guys can see here, I have a large candle body with small wicks and a small candle body with large wicks. This is the lower probability option for our entry model, and this is a higher probability entry model, and I'll explain why in a second. What we'd want to do is we'd want to grab our order block tool, and for this entry model specifically, for the higher probability, we'd want to mark it out from the tip of the candle body to the bottom like so. So this is how our order block would look on a high probability. On a low probability, on the other hand, we can either draw it from the body only like so, or some people also like to do it this way as well. We can draw it from the tip of the candle body to the low of the wick. Same goes for the opposite side. We could draw it from the tip of the candle body to the top of this wick right here. It's completely up to you. Now let me give you a rough idea on how this would look as an entry. So we draw out our order block like so. Now obviously this is a bullish candle, so let's assume this is the last bullish candle before price goes bearish before tapping back in. So to give you guys a better idea, this is how it would look. We draw out our order block like so. Price would retrace down from here before going back up and tapping into our order block. So we take out market structure somewhere here. So this would have been a high right here that this candle would have taken out. And then as price retraces down and then goes back up, taps into this order block before going back down and continuing to the downside. Now, before I continue with the presentation, if you want to get funded 6 figures in trading capital completely guaranteed in under 24 hours, make sure to click the first link in the description, which will lead you to my Telegram channel where me and my team will assist you in the swift funding process. If you didn't know, the failure rate for passing a prop firm challenge is over 90%. Instead of wasting money and failing multiple challenges in a row, we can pass your challenge, get you funded 6 figures the same day, and to top it off, you only pay after we pass it for you, so there's no risk from your end. Be sure to take this opportunity and drop me a message through Telegram before the slots get taken up. This is a limited time offer that you don't want to miss. And for those of you who want to take this opportunity to a whole other level, I have developed a unique trading algorithm that isn't only tailored to pass your prop firm challenges, but also goes on to generate you anywhere from 4 to 12% a month. Now I know that's a bold claim to make, but with many of my clients passing challenges and consistently receiving payouts, I can only imagine what a great opportunity this is for you. If you're interested in joining, message the word ready to the second link in the description below. Now let's continue with the video. Now the reason why this candle right here is much more high probability is simply because it gives us more breathing room. So if price was to tap into this, we'd have enough space for it to play out before retracing back up or retracing back down to the downside, whichever one it is. For this one, however, if price was to tap in, we won't have much room to play around with. So we could easily get wicked out, price would hit stop loss, hence why it's a low probability candle entry. So I hope we've cleared up how to draw an order block from a candle. Now let me show you guys a diagram of a bearish example on how this entry would look like. So price would be coming up to form a lower high like so. And once we do form a lower high, this high right here, or this liquidity resting above here, is taken out with a break of structure. Now, as soon as we take this out, price goes up, reverses back down, we take out this low right here. What do we call this low right here? We call this a market structure shift. Once we get a market structure shift, that's when price retraces back up to where our order block would have formed before going back down towards take profit. So in simpler terms, first thing that happened was liquidity got taken out. As soon as liquidity got taken out, this is also counted as a break of structure. So we'll mark that out as a break of structure like so. So we've had a liquidity sweep and we've had a break of structure in one move to the upside. Now in this apex right here, we'd have our final bullish candle before price goes down to the downside. Now this final bullish candle that we're going to have right here will be where our order block will be drawn out from. So to give you guys a better idea, if we get our order block tool like so, we draw it out like this. And then once price goes down, we'd also want to anticipate a market structure shift like so. So let me just draw that out for you guys. We'd have a line right here that represents our market structure shift. Once again, liquidity was taken out, price broke structure to the upside. As price reversed down, we had a market structure shift. And then after our market structure shift, price retraces back up to our order block right here before going back down to our desired take profit. Now, when it comes to drawing out our order block, we can also use our Fibonacci tool to mark it out like this. This will give us a much more refined entry. So let's just say price taps into the 50% mark. We'd put our stop loss just above our 50% mark, which will basically give us a more refined entry like so. So it would look something like this. And once again, this is a bearish example simply because price was initially bearish on our higher time frame. And when we drop down to our lower time frame, this up move right here was only creating an apex to continue to the downside. Now let me draw you guys a bullish example. So we'd grab our path tool and it would look something like this. So this is the same concept as our bearish example. Price was initially bullish in the higher time frame. So this right here, this down move right here is only creating an apex before price continues to the upside. So this right here would be our liquidity. We'd mark that out as our liquidity like so. Also a break of structure like the previous example. So price broke structure. We'd mark that out as a break of structure just to not get mixed up. A break of structure is not the same as a market structure shift. A break of structure is basically price breaking structure to the same direction. So if price was to continue to the downside, this is just a break of structure. Whereas if price continued to the downside and came back up, this right here, as we can see, is a perfect example of a market structure shift like the previous example. So we'd mark that out as our market structure shift. That's a break of structure simply because price was initially bearish, and this is our market structure shift because price went from bearish to bullish. Now, after our market structure shift, price retraces back down to our area of interest. Once again, let's just use our Fibonacci tool for this example. Let's just say here we have our last bearish candle before our bullish candle. We'd mark it out from the tip of the candle bodies like so. And then we'd look to enter at our 50% once price takes out this market structure. So we get a market structure shift before retracing back down and tapping into our 50%. So once again, this is how our entry would look like. We can either put our stop loss right here or even below this low right here. And then we'd put our TP somewhere up here. This is the smartest take profit to have in my opinion, simply because it's the most logical one. It's the most recent high and it gives us a reasonable risk to reward. Once again, guys, if you want to get funded within 24 hours completely guaranteed, click the first link below. If you want to step it up a level and automate your whole funding and payout process, be sure to click the second link below and message ready to get on board on my program. Slots are limited for both programs, so be sure to take the opportunity while it's there. If you enjoyed this video, be sure to like, comment and subscribe for more value.